Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning market webcast. Okay, daily chart, and you can see they're trying to break out of this, this jammed up range between the 100 and the 50-day exponential moving averages. You can see it starting to peak up above here. They're going to try and do the 200. It's on the continuation chart, it's 26.9680. On the front month chart, it's 27.28. Those are the exponentials. The simples are a little bit different. So whatever your preferred brand is of 200-day moving average, we're heading up into that zone, and we've been talking about that zone now for a couple of weeks. I mean, since back in here. So the Fed said all the right things, and now it's really on the bulls to continue to bleed this thing to the upside. They have two potentially directional days in front of them. You can see here on the hourly chart, we battled over the weekly pivot early in the week. The tiebreaker really was the Fed. We expanded out of this compression, and now we've come back to retest the hourly mid-band in and around 83, 84. We've traded as high as 26.91.75. So we've taken out that 77.75 from a couple of Fridays ago. You took out the 63 and change from the Sunday open along the way. And now you have to start to look at those 200-day moving averages up above. It's the last day of the month. We'll get another monthly pivot tomorrow. But, I mean, January has been about climbing up off those lows. I mean, Christmas Eve, we tanked. And we have come back 370 or so handles from the lows, 375 handles from the lows. So a pretty impressive January. Decent day in the room yesterday. I didn't really like the trade before 2 o'clock. We ended up having a 14-handle day just from 2 to 4. Not my best work, but I'll take it. It beats being, negative something. So not a red day, but we made our 4 handles a day, which is, really what we set out to do every day. And we're sitting on a really nice week, and the month is in fantastic shape. It's looking to be a 400-handle month, and, I'll take it. So as we head into today, you got to watch this area here, and then you have to deal with the round number up top. It's really that simple. The pre-FOMC price that we like to watch is down here at 26.59. If the bears can get some momentum today, within the first 24, 36 hours of a Fed announcement, that price likes to get another look, whether it's from above or below. If that goes support and you make a higher high from there, then next week is just going to be more of the same, and we'll be printing stuff with 27s on the front of it. The bulls have a really, really good opportunity here to take this market to the upside. I'll be interested to see if they follow through and do it. I'd be very surprised if they did not. The bears have been on the run for a while now, and while they have little fits of glory, every one of those fits of glory tends to get rejected. I mean, I have written rejection on this chart quite a few times in the last couple of weeks. Rejection, 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 and they just build it. Take that out. Take that out. This is the bulls to lose. It is absolutely the bulls to lose. All right, everybody have a fantastic day. I'm really fired up about the 920 thing that we're doing live over on Instagram. The word is getting out about that, and we're starting to get more people in there, which is fun. It's just 5 or 10 minutes on the tape right before we open live. A chance for me to talk to you, and a chance for you guys to see what we talk about in the room before they ring that bell. All right, have a fantastic day. Trade them well. Talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.